Friday, January 21st, 2022, Monaco 64, home of alternative economics and contrarian views. So the world economy is unraveling as inflationary pressures persist, and they will persist for many years to come. As I've said many times, the central bankers are really in a bind. They can't really stop the inflation. And now we've got the economies slowing down massively. We've seen recently that Chinese GDP was a lot weaker than expected and is way below its long-term average of around 6.5%, 7%. Yesterday, we saw some really weak economic data from the US. Of course, we've seen that the jobs creation through non-farm payroll is slowing down massively. We've seen that CPI is growing at over 7%. So the consequence of inflation is continuing to show into prices. Yesterday, we had the weekly initial jobless claims, and that has risen from just below 200,000, which was a very low, actually record low for the last 50, 60 years. But now it's rebounding as quickly as it went down. And yesterday, that number was expected at 220,000, came out at 286,000. And we saw the day before as well, the Empire State Manufacturing Index come out at a negative number, was expected positive. Yesterday as well, in terms of the inflationary scenario, we saw German PPI, the producer price index there. Previously, we saw it come out around 19.2 in December. Guess where it came out yesterday? 24.2%. It was expected 19.4. So prices are surprising on the upside. We saw Norwegian PPI, of course, last week come out at 68%. We saw yesterday as well the CPI for the Eurozone come out at 5%. And the economies, though, they are slowing down. And this morning, we've got more signs of weakness. And you can say whatever you want. You can say it was Omicron, but compared to the expectations from economists who are asked by the mainstream media that report these data, like investing.com or Bloomberg, it came at a lot less lower than expected. And of course, these economists hopefully know about the impact of Omicron. And despite that, for example, this morning we've had retail sales for the UK. They were expected to rise year on year by 3.4% in December. They dropped by 0.9%. The month-on-month number was expected to go down. I guess people factored in Omicron, but only by 0.6, and it went down by 3.7%. So I don't think things are as good as we're told. I saw the other day there was an MP on talk radio. My wife was listening to talk radio online, and he said the economy is doing great. Well, what do I think is happening to the economies? I think they destroyed basically the real important part of the economy, the small to medium-sized businesses. They've destroyed the private section of the economy by governments borrowing so much, by government spending so much and taxing so much. Yes, because in the last couple of years, all the major economies of the world have done, especially in the US and Europe and the UK, is to increase fiscal spending and monetary spending. Fiscal spending, of course, has everything to do with government spending. And we're now at a juncture where unless they pump in more fiscal and monetary spending, the economies are going to come to a grinding halt. And why is that? Well, because the private sector really can't cope. People's cost of living have gone through the roof, I would say by more than 10%. These inflation data, they're phony. Taxation has gone up because a lot of governments like the UK have to prove to investors that they're paring back all the stimulus and that they're going to pay back all the the debt they've incurred in the last few years. And of course, they won't be able to do that. So am I saying I'm for more government spending and government central bank, stimulus, monetary stimulus, QE? No, of course not. This is unfortunately what happens when you follow a Keynesian philosophy for generations. We are at the end of the Keynesian miracle, so to speak. In my opinion, of course, the best thing for an economy is very small government, sound money, no central banking. And talking about central banking, yes, the best thing to do with central banks, the best thing for central banks is for them to disappear. And I saw that Cliff High spoke about that, and I'm in agreement with him. He thinks they're going to go away. Well, that would be great. And the Fed, or maybe the Fed and the other central banks, they will kill themselves by their actions that they're performing, the crazy money printing. Yes, and some people will say the Fed doesn't print the money, it's the commercial banks, and I agree. But without the Federal Reserve, the commercial banks wouldn't have the wherewithal to do it. And I recommend a really good video explaining the split circuit monetary system that we have. There's the private retail monetary system where all the money is created by the commercial banks. And then there's the public wholesale where the Fed creates reserves out of thin air to pass on to the banks. And that's by John Titus, at Best Evidence. It's entitled Larry and Karsten's Excellent Pandemic. Yes, he explains, goes through the whole monetary circuit, not just for the Fed, but all central banks. And I did see yesterday that the Federal Reserve is tweeted out, has the Federal Reserve decided to create a CBDC, question mark. The Federal Reserve issued discussion paper as first step in fostering broad, transparent public dialogue on CBDCs, potential benefits, risks of U.S. CBDC. Well, the best thing the Fed can do is close its doors, really. Will a CBDC be any good for the general public? No, you can bet whatever the Federal Reserve does is for the benefit of its shareholders. And the most powerful Federal Reserve, private Federal Reserve, regional bank, of course, is the New York Fed, that's owned by the big New York banks. And you can bet they're going to be, they'll have discussions that we won't know about. These public, transparent public dialogue, you can bet it will be irrelevant. Leopards don't change their spot, so I wouldn't put too much attention or pay too much attention to CBDC. I would keep stacking, and as Mike from Rethinking the Dollar says, get your weight up, gold and silver. Stay outside this fraudulent central banking system. It's not going to get better. And as Charles Lindbergh Sr. once said about the Federal Reserve, and this was back when the Federal Reserve had just been created and he was a congressman from Minnesota. He said, "This Federal Reserve Act establishes the most gigantic trust on earth. When the President, Woodrow Wilson, signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill." So accepting a new CBDC from the Federal Reserve will not do anything to neutralize this worst legislative crime of the ages, as Mr. Lindbergh Sr. said. The only way to neutralize that is to abolish the Federal Reserve Act, rescind it, whatever you want to call it. So, as I said, stagflation is here to stay. And it will be interesting to see how the Fed reacts in terms of rate rises, because I have a feeling the economies are, as I said, are really unraveling. And I've noticed that, as you can see here, the Fed's balance sheet is continuing to grow pretty much like it was prior to them announcing tapering. So where is the tapering? I don't think they're doing any tapering here. We have to keep an eye on this. So with that, let's quickly look at where the markets are this morning. It's at 10 to 9 a.m. London time. Yesterday, we saw that the stock markets were quite strong early on, and then they completely turned around and went down. So it seems like the mood right now is to buy, not to buy the dip anymore. It seems to be to sell the rally at the moment. So that's not a very good sign. Gold and silver continued to do quite well, silver especially. Gold got up to just below 1850. And I think they're probably going to take a little breather right now. This morning, I've noticed that just in the last 20 minutes, I think it probably was the Bank of England with the bullion banks. They rated gold and silver, not that much, but I'm not surprised. We've come back down here in gold to retest the 1830 area. That was a big resistance. We made a low of 1831.45. Right now we're at 1832.20, down just over $6. High has been 1843. Silver is at 24.30, down about 15. The low has been 24.26. The high 24.57. I think we got all the way up to 24.71 yesterday. The Dow is down about 7 points. The Dow future, the NASDAQ future is down about 105, about 0.75%. The S&P 500 is down a third, or 15 points. The FTSE is down 1%, or 77 points. To the currencies, sterling, not surprisingly, is down about a quarter, 135.68. Very weak economic numbers here. The euro is up a quarter at 113.37. The dollar is down an eighth versus the yen at 113.95. And the dollar is unchanged versus the yuan, 134.50. Aussie dollar is down 0.5%, 71.90. The dollar is up 0.2 versus the Canadian dollar, 125.27. The Kiwi dollar is down almost 2/3% at 67.17. To the commodities, yes, we've seen crude come off quite a bit here overnight. We're down about 1.8% at 83.88. High-grade copper is down over 1% at 4.52. Yes, expect commodities to remain volatile and tangibles in general. I saw yesterday, of course, the mining stocks kind of corrected a little bit. Previous day, of course, GDX, GDXJ, they were up over like 7%, just over 7%. But I think a lot of people will be surprised because a lot of people expect to see a big correction in all markets. And they're including commodities, gold and silver in that correction. But I think this time, gold, silver, and all the other commodities are going to outperform. If anything, go higher, while paper assets, stocks, and bonds, especially technology, correct quite quite significantly. I was looking at a stock yesterday. I'd heard of it. To be honest, I didn't even know what they did. Peloton. They make exercise bikes, and that stock got up to like 160 last year, and now it's around 24. I mean, and you look at ARK as well, it all seems to be unraveling. Everything that has done really well since 2020, I think, is starting to move lower. And overnight as well, cryptocurrencies, Bitcoin made a low, a new low for the month, I think, or multi-month low, just below 38,000. So even the cryptocurrencies are kind of correcting sharply here this morning. What about the bond market to finish off? Yes, the 10-year yield is dropped here. It's down about 4 basis points, just around 180. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.